This is Morning Stock Watch for 7 February 2020 weekly for SPY, Netflix, and Tesla. Starting out with SPY, SPY ended the week bullish with a comeback after 2 bearish weeks surrounding coronavirus fears. The market had a nice dump last week down to the Tinkinson where it got a little energy for a sharp bounce back to all-time highs, closing the week out on top. The week ending on the 24th of January created a peak bringing price down to the 50-period moving average at lows of 320.73. Price then bounced very hard right back to all-time highs. The overall trend of the market is still very bullish with some things to consider, with the first and second peaks on January 22nd, 2018 and January 13th, 2020, about 2 years apart. This negative divergence is completed, and price still appears it's got its eye on the 340 price level, which also happens to be around where the weekly fan resistance appears. This looks strong and convincing, and most likely is there for a reason. The smaller time frame charts also have some overbought negative divergence, such as on the 4-hour chart. Next are the market sectors and ETFs of SPY, QQQ, Dow Jones, NASDAQ, SMH, IWM, XLF, XLC, and the VIX. Simply looking at the weekly candles in comparison with SPY, SPY, NASDAQ, and QQQ all ended the week at all-time highs despite negative divergences. In comparison, IWM sold down considerably more this week. When looking closer at the weekly IWM chart, nothing really strong besides the fact that it closed just a smidget below the Tinkinson. Maybe it means something, maybe not, but it looks more bearish, especially with these long upper wicks popping up. So now where does the market go from here? A couple weeks ago on SPY, we were looking for a possible retest of the Tinkinson at 320 due to the negative divergences, and we got that. So now what? We have a red spinning top evening star, along with some negative divergence for the peaks we got during the past 3 trading weeks. Price really looks like it wants a shot at the 340 price level, but will we actually see it? Next on the list is Netflix. Weekly close price, $366.77. So what's happening with Netflix? For the past 10 weeks, we've been watching Netflix from $315 and looking for it to fill a gap up to $372, which it has surpassed this week with highs of $375.88, which it may have more room to fill up to our second target of $385, maybe. On the daily chart, price shows some moderate negative divergence. It might be able to pull out a few more highs if the stock market can make it to its own levels. On the hourly chart, price has closed below the Tinkinson and the Kijun. The only thing bullish working out for Netflix in this chart is the thick green cloud there, but that will be a different story by the time the market opens on Monday. We shall see. Now last we have is Tesla. What the heck is up with Tesla this week? Tesla is up over 320% this year and highs of over 440%. The majority of this swift move up was made within the past week. When you look at the chart, it's just like, wow, really? A chart that looks like this is said to be a parabolic price chart and should be approached with extreme caution. However, this is Tesla, not a penny stock. Some people are calling it a bubble like Bitcoin and Volkswagen, but Tesla, to me, appears it has a solid future in the U.S. automotive industry. And Elon Musk has a lot of dreams he's making a reality, so this will be a fun one to watch closely from here on out. The chart of Tesla is risky, as it's basically in no man's land, making highs of $970, just missing the $1,000 price level. It's practical to think that price wants to actually hit $1,000 this year, possibly. In the meantime, downside targets look solid at $645 to $650 if price does decide to have another run down, even as far as $580. For upside, it would be favorable to see hourly and daily closes above $800.